Part 4 of Unknown for Small Farm Economics, presented to you by Farmer Michelle. A reminder, I'm a mixed veggie farm here in Troutdale, Oregon. I operate as a single member LLC, and I wanted to now get into, as I've alluded to throughout some of these videos, around profit and payroll. So we talked about cost of goods sold, which can or cannot include the labor that is involved in producing those goods that we sell. And there's some financial implications about how I pay myself as an LLC business. So as an LLC business, a single member LLC, I am a pass-through entity. So any extra revenue, net income after all the other stuff's paid is my quote-unquote profit, which is essentially my owner's draw. So anytime I pull money out of the business account into my personal account, that's considered an owner's draw. That is how and what I pay myself. And that owner's draw doesn't have tax withdrawn automatically like your paycheck would at a business. So anytime you look at your paycheck, you're a W-2 employee who gets W-4s at the end of the year, and you pay around, golly, I don't know, the total numbers around 15% of your take-home pay is subtracted and allocated to various taxes: Medicaid, Social Security, state income taxes. So the thing is that your employer who doles out that pay stub and that paycheck to you is also matching those taxes, is paying those other taxes. And that is a business expense and a tax write-off for that business. Hence why becoming an S-Corp would be really beneficial for me, because then my owner's draws also become pay stubbed, and a chunk of the taxes become a business expense instead of a tax liability that I personally carry and pay. So there's some benefits to that. Instead, my take-home pay is all of the owner's draws, which is considered profit of the business, and then I get taxed. I pay 30% of that, and then that's also considered profit. So then there's like some taxes on the profit side, on the business side as well. So I kind of almost get like a double tax almost. Taxes are complicated. I don't fully get them, so chime in. I am not a trained accountant. I did not study business or economics in school. This is just what I'm experiencing, and what I think the numbers are telling me, and what my CPA tells me from what I can understand and gather. I've done a lot of research. I've looked into things. I feel confident in the pay stub stuff that I've shared, not necessarily my own. But still, that 15 versus full liability, full 30% is a huge difference. And so that's why business entity matters, and that's why talking about what does profit mean matter. And like I said, the cost of goods sometimes includes, but doesn't always include labor. So I wanted to share this from the USDA. It shows the labor share of total cash expenses. So our total revenue minus all our bills, cost of goods, seeds, and you'll see specialty crops here at the top under all farms is the biggest, and it's around 40%. So this is USDA Economic Research Service data. They do a farmer census around every 2 to 4 years. So 2022 and 2024 are the years that I'm pulling data from. And so a common way to consider running a small business, especially a small specialty crop farm business, is that 60% of your revenue is going to go towards cost of goods. Interest, taxes is going to go towards seeds, soil amendments, replacing, repairing, maintaining equipment and infrastructure, building new infrastructure, all this stuff, right? That's 60% of your expenses every year. Car insurance, car payments, everything. And 40% is payroll, is labor. That's the money, the paychecks I cut and send out. That is taxes associated with those. It's paying services and professionals to ensure that that's all properly done. It's, I got to maintain a lot of financial stuff on the side of human resources, human relationships to run payroll and make sure our labor costs are appropriately allocated and paid for and up to date. So, and that's 40% of the cost of the business. Often you'll speak with small farmers and they don't always include, a lot of small businesses actually don't always include their owner's draws, their pay for that they pay themselves as part of that 40%. So they might report like higher margins or look better or like be like, oh, we boast this profit. But the reality is that you still need to subtract your pay. And then you pay taxes on that. So what is your actual pay? So traditionally, I've paid myself anywhere from $0 a year to I average around 25 to 30 really consistently, to around 50K is what I had to get myself up to qualify for this mortgage. And then I can lower it afterwards. So I had to have 3 years of around 50K or show a growth pattern of 50K profit income to qualify for my home mortgage to purchase my farm. And then you have to subtract 30% of 50K. So that's around like $15,000 in taxes everywhere that I pay personally, separate from the farm. That's why you file different additional forms to the IRS. So really my take-home pay, even after 50K, is only like $35,000, which is still really low. That's really sad. It's really low. So when people talk about profit, I really want to know what they mean by profit. Is that total revenue? Is that gross income? Is that net income? What is their 60-40 split between cost of goods and labor? Right? And then what is their take home from that 40% minus the 30% in taxes? What is the profit? What is the actual profit? What is doing well? What is good? And I think more often than not, I find that people are in the shits. They are not making a lot of money. And they're not doing as hot as they might project that they are or say that they are, or depending on the numbers they're looking at, they might be technically factual, but they're wording things and using certain words to hide certain facts as well. So I think it's always important to have some financial literacy, media literacy, be able to contextualize and understand what people are actually saying when they talk about things. So that 60-40 split is a benchmark I use when I start budgeting for the farm, and I include my owner's draws in that 40% of labor. So I'm attempting to make sure that 40% of my gross income is labor, or less would be ideal, but I'm trying to meet these benchmarks or these bumper rails. And that includes my owner's draws, which essentially means the farm doesn't make a profit. There is no profit. I pay myself less than my employees per hour worked. And I'm not necessarily making a profit, though the farm technically looks profitable